It is a season of tax planning too. IRS is giving you 20% discount if you are having qualified business income. So the qualified business income means if your income from your partnership firm or a sole proprietorship, S corporation, you can deduct up to 20% of your income. This is the maximum deduction. There is a threshold limit. If you're single filer and your income exceeds above 197,300, then this deduction start going to phase out. For married filing jointly, the limit is 394,600. This provision was set to expire in 2025, but thanks to this new bill that it's back, you can still get this deduction. If you're expecting your income is going to above this threshold limit, you can defer your income for next year.
The idea is for a flow-through, and this rule only applies to LLC and S-Corp. For a flow-through entity, it does not apply to C-Corp. And this was supposed to expire by the end of this year. Now it's permanent. A lot of people were thinking about converting C-Corp to S-Corp, S-Corp to C-Corp, because C-Corp still has 21% tax. S-Corp in theory had 37% tax. Minus 20% was giving them some benefit, so 30%. A lot of people were thinking about converting their S to C and vice versa. So now this rule has been made permanent, meaning this 20% deduction is here to stay, is not expiring anymore. So now the question is, how much income are you expecting in your flow-through LLC or S-Corp? And then based on that, do you need to do some planning around it with this QBI deduction?
You can maximize your retirement contribution. That way you can be in this threshold limit. Also, you can draw reasonable salary from your S corporation. That will also help you to get maximum deduction.
Meaning you can do 401k, SCP, solo 401k, defined benefit plan. There are plethora of plans, defined contribution plan, 457 plans. So you think about one of those things as how do I reduce my taxable income?
The education funding plan. The 529 plan is for our kids, but this plan is for our employees. So IRS is giving you $5,250 of annual benefit per employee. So if you are having 10 employees, you can deduct up to 50,000. But for this deduction, what you need to do is you need to create plan 127. Under this plan, you need to set up the eligibility criteria. You need to list down all the education program that can be aligned with your businesses, and you can just need to motivate your employees to get this benefit, so that it's a win-win situation for employer. They will attract,
employer, the business is paying the tuition fees for the employees, and it's not taxable income to the employee. It's tax deductible for the business. When that business is paying the money, business can claim the expense, and the employees don't have to pay tax on this income.
SALT deduction and PTET planning. As we see in like that state and local tax limit has increased from 10,000 to 40,000. But having income of $500,000, the limit is still the same. You will not get the benefit of 40,000. If you are paying more property taxes, state or local taxes, then you can elect for PTET. Under PTET election, there is no such cap limit. Whatever amount you are paying for state and local tax, you will get that benefit. And
this slide is meant for people who are making more than $500,000. If you are making more than $500,000, the very first thing that comes in your mind, this SALT thing is a nonsense thing. It doesn't mean anything. I'm still at 10,000. I mean, if you're making more than $500,000, SALT limit is going back to 10,000. What do you have for me? I'm making more than $500,000. Then you have PTET, pass-through entity tax. The concept in a nutshell is, if you have a business, most of this, if you're making $500,000, this money is coming from a business, not a salary, generally speaking. So the business is making, let's say, 1 million of profit in this example. So business has to pay 100,000 of taxes. When this money, 1 million comes into your personal tax, you have to pay 100,000, 10% give or take, state income tax. What if this 100,000 is paid by the business to the state and shows up on your K1, 1 million of the income and 100,000 paid to the state. So when you take it in your personal tax, you show add 1 million of the income, 100,000 already paid to the state. So this 1 million is not creating additional tax liability, because the tax liability that this 1 million is creating is already paid by the business, and it gets better. Business gets to claim this 100,000 as a deduction. But this plan only works if you are making at least $500,000, and the concept is PTET, pass-through entity tax.
Now it's time for bonus. This bonus will not be credited to your bank account, But yeah, we'll definitely strengthen your cash flow statement. Earlier, the bonus depreciation was at supposed to be 40% declining rate. But because of this one big beautiful bill, 100% bonus depreciation is back. So this bonus depreciation will be applicable to all these assets. Only those assets will be eligible for this benefit. Those which are purchased after 19th of January 2025 and having a recovering period less than 20 years. And those assets must be placed into service before 31st of December. Then you can take this benefit. So if you are expecting income this year, if you want to upgrade your equipment or planning to buy any machinery or equipment, this is the best time that you can do it, and you can take 100% bonus depreciation on it.
So this depreciation was created after COVID. And at that time, the plan was that nobody knew COVID will last forever. So at that time, the plan was first year you get 100%. Next year you get 80. If you buy this year, you get 100% deduction. Next year 80%. The year after 60%. So for 2025, it was supposed to be 40%. Now they changed the rule for 2025 and 2026. You can buy anything with certain limitation. The still could be new, used, but life has to be under 20 years for this asset, for this machinery. You can claim this expense. You don't have to put it on the balance sheet. You don't have to depreciate it. Now take an example. You want to buy $100,000 of copy machine. You generally don't pay $100,000. You pay $5,000 and put it on the payment plan for 3 years, 4 years, 5 years. But once you claim this $100,000 of expense, it can potentially create a saving of $35,000 for you. Because $100,000 become an expense, your tax bracket is 35% with federal and state, so you save 30. So in theory, you paid $5,000, bought an equipment that you are using, and created a saving of $35,000.
One more provision, section 179. This is also related to depreciation. Under bonus depreciation, there was no limit. There is no investment limit. There is no income limit. But under section 179, there is a limit of your investment as well as income. So under this section, you can claim only up to 2.5 million. If you purchase more than that, then it will start going to phase out. Under this section, you can claim only if you have an income. You cannot create loss with this section. Compensation for owners and key employees. Yeah, it's a year end. For owners and key employees, compensation is not just a salary. It includes bonuses. It includes distribution. So make sure you optimize your salary. Bonuses paying in December versus January will shift your tax year. So if you are expecting more income this year, you can defer your bonus for next year. Then yeah, and you can.
If nothing else you do after this meeting in next 2 months, please look at your salary, bonus, and distribution. It can change the tax bracket, especially if you have a flow-through entity. Salary costs you 15% extra over distribution. If you are making $100,000, if you take $100,000 through salary, you just paid $15,000 extra to the government. If you take part of it as distribution, you pay 15% lesser taxes. On the distribution, there is no social security, no Medicare taxes. So just look at the total picture. You don't have to go in the gray area. Just see what best can be done in your situation.
1099 contract. So if you are working with the contractors, you need to issue 1099. If you are paying to independent contractor, freelancer, sole proprietorship, and if you are paying for more than 600, then you have to issue 1099. For 2026, this limit has been increased from 600 to 2000. So for 1099, you need to list down the contractor list. You need to check whether it's really a contractor or you are going to consider them as an employee. And if you are considering them as a contractor, then you need to collect W-9 from them, so that before 31st of January, we need to issue 1099 to them.
So for this year, the limit is still $600. It was 600, it still is 600. For the next year, we'll talk about next year. For 2025, if you paid more than $600 during normal course of business, meaning if you don't have a business, you're paying $600 to babysitter, you don't have to issue 1099 to her. In your normal course of business, if you paid somebody in total, let's say it doesn't have to be single $600 transaction. I pay $100 every month to the cleaning lady, that's a 1099 for my business. In total, if you paid more than $600, you need to get a W-9. You don't need to issue this 1099 to corporations, S-Corp, C-Corp, they don't need the 1099. LLC, proprietorship, attorneys, medical service provider, they should get a 1099 from your company going to them before January 31st.
Research and development. This government wants to encourage domestic research and development. So that's why they are giving you immediate rewards. Earlier, for any research and development expense, you need to amortize it for 5 years. But now, if you are doing any research work, domestic research work, you will get 100% deduction on it. For foreign research, still you need to amortize it for 15 years. This benefit is for only for domestic, and this is retroactive. So even for from 2022 onwards also, if you have done anything and that cost has not yet been recovered, you can amend those return and you can get those
You
benefits.
can go back prior years.
Yes.
You cannot claim those expenses now,
Right.
but you can go back and amend those years that I invested this much money into R&D and now I want to claim it. So you can go back prior years. The idea with Section 179, with bonus depreciation, with R&D, how do we bring more money in the market? How do we make people spend more money so the economy is growing? Section 179 is encouraging buy more equipment, claim it as an expense. Bonus depreciation is doing the same thing with different limits, different criteria. R&D is doing the same thing. Bring the domestic. If you're international, you have to amortize it and will give you a hard time. Why are you doing it there? If you do domestic research, claim it as an expense.
Apart from deduction, you are also getting a research and development credit. So you can take benefit of both. If there is no either or situation, you can take deduction as well as credit. So this way you can get maximum tax
So
benefit.
before you move on,
Yeah.
before the year end, also check if your business is cash basis or accrual basis. The system is allowing an automatic change by filing 3115 along with the tax return this year. So a lot of business are well suited for accrual basis. Some businesses are well suited for cash basis, but it creates an opportunity for you to take a step back and see if I have the right structure, right type of accounting. Do I need to make any changes in my situation?
EBITDA based interest deduction. So earlier the interest deduction was 30% on our earning before interest and tax. But now,
This rule is only applicable if your business has more than 25 million in revenue, meaning larger business. Then a lot of these larger business, they are highly leveraged. They have a lot of debt. So the amount of interest that they are paying, not everything is deductible in the same year. That's what the rule is. Please go ahead.
so now you can add back depreciation and amortization, and on that also you will get 30% deduction. So now deduction is on EBITDA, 30% on EBITDA.
So they are
You will
saying
get
take
more
more loan will allow you the interest
More-
deduction.
Yeah.
So earlier it was EBIT, income before interest and tax. And now they are adding, okay, we will let you claim depreciation and amortization as well as part of this formula. So you can claim more interest expense. So this is to leverage, to encourage more debts, more leveraging by the larger companies.
The most important thing, revisit entity structure. We know that there are 5 entity structure. It's sole proprietor, then partnership, LLC, S corporation, and C corporation.
There are 5 types of
Yeah.
structure: proprietorship, partnership, LLC, S-Corp, C-Corp. If you look from the top, C-Corp, S-Corp, LLC, partnership, proprietorship. When you move from C to proprietorship, C-Corp, S-Corp, LLC, partnership, proprietorship, the complexity decreases. C-Corp is most complex, most expensive to manage, most administration, best legal protection. Proprietorship has the least legal protection, easiest to manage, easiest to create, less expensive. Proprietorship tax return is 1 page. For the same transaction, C-Corp tax return will be probably 100 page. So C-Corp, S-Corp, LLC, but at one point of time, 5 years ago when you started the business, proprietorship made sense. But take a look, does it still make sense? Is it the time to be thinking about a different type of structure? Does it make sense to be changing the type of structure you have? Is there a benefits around it?
So that was a business tax strategy.